Not a Wall Street pro, not a bank investor. Yet, Japanese housewives outsmarted global finance from their kitchens. In 1999, while Japan faced economic struggles and low savings returns, a group of clever Japanese housewives, led by the figure of Mrs. Watanabe, began dabbling in foreign currency trading forks from their kitchens. Amidst job uncertainties and a broader economic downturn, these homemakers saw an opportunity to make extra money. Their success in forex trading made them significant players in the global financial scene, outshining traditional finance professionals and big-shot investors. This is the story of how Japanese housewives conquered the world of forex trading. In the early 2000s, Japanese housewives emerged as investors in response to the economic downturn following Japan's late 1980s asset price bubble burst. With interest rates near zero and traditional investments yielding minimal returns, these women sought alternative ways to grow their household savings. Utilizing the internet and self-education, they ventured into the stock market and other investment avenues. The term Mrs. Watanabe represents these enterprising Japanese housewife investors, typically women in their 40s and 50s managing significant household savings. Known for their disciplined and diligent investment strategies, they preferred low-risk, long-term investments, such as dividend-yielding stocks. Adopting a conservative buy-and-hold approach, they avoided excessive trading and focused on securing steady income. Faced with low returns on domestic savings, Mrs. Watanabe turned to a strategy known as the carry trade. This involves borrowing money in a currency with low interest rates, like the yen, and investing it in a currency with higher interest rates, like the Australian dollar. The difference in interest rates became her profit. By borrowing yen at low interest rates and converting it to higher yield currencies, Mrs. Watanabe made a significant impact on global finance, conducting trades from her kitchen table. This strategy attracted global attention and marked the birth of the Mrs. Watanabe carry trade phenomenon. The carry trade was lucrative until 1998, when the Russian financial crisis hit. Russia defaulted on its debts, causing a massive shock to the global financial system. Investors, seeking safety, flocked to the Japanese yen, causing its value to rise. This made it expensive for Mrs. Watanabe to repay her yen loans, leading to significant losses. The Russian crisis highlighted the risks involved in the carry trade, serving as a wake-up call for Mrs. Watanabe and other carry traders about the volatility and interconnectedness of global markets. Following the Russian crisis, Japan faced deflation despite zero interest rates. In 2001, the Bank of Japan introduced quantitative easing key, creating new money to buy government bonds, flooding the economy with cash and lowering interest rates further. For Mrs. Watanabe, key presented both opportunities and risks. Lower interest rates made the carry trade more profitable, but the risks of currency fluctuations remained high. Despite these risks, many Japanese retail investors continued with the carry trade, leveraging the lower borrowing cost. Around 2005, many Japanese housewives ventured into online currency trading. The term Mrs. Watanabe gained global recognition, representing savvy, computer-literate women trading forks from their homes. This trend highlighted the shift from traditional savings to more dynamic investment strategies. Triggered by the collapse of Lehman Brothers, brought new challenges. Investors sought safe havens, driving up the value of the yen. This surge made repaying yen-denominated loans costly, leading to the rapid unwinding of carry trades and substantial losses for Mrs. Watanabe. The crisis underscored the risks inherent in global financial markets, serving as another reminder of the volatility that Mrs. Watanabe had to navigate. Despite the setbacks, Mrs. Watanabe adapted. Moving away from carry trades, she embraced day trading, leveraging Japan's household savings to navigate financial markets. With technological advancements and online resources, day trading became accessible, allowing Mrs. Watanabe to maintain her presence in the financial world. In 2012, Shinzo Abe's economic policies, known as Abenomics, aimed to combat deflation and stimulate growth through monetary and fiscal stimulus. Initially successful, these policies saw Japan's stock market surge. However, the subsequent market volatility and rising yen value posed new challenges for Mrs. Watanabe. Despite these fluctuations, Mrs. Watanabe's financial activities remained closely watched, reflecting her significant influence on global markets. The story of Japanese housewives outsmarting global finance offers several valuable lessons. Financial education is empowering. The success of these housewives underscores the importance of financial literacy. Their dedication to self-education shows that with the right knowledge and tools, anyone can become a successful investor. Discipline and patience pay off. Mrs. Watanabe investors prove that a disciplined, long-term approach to investing can yield impressive results. They avoided impulsive decisions and resisted the temptation to chase short-term gains. Adaptability in a changing world. When traditional investment options failed to provide satisfactory returns, these housewives explored alternative opportunities, demonstrating the importance of adaptability and willingness to learn. Community and collaboration. The power of sharing knowledge and experiences within a community of like-minded individuals was evident. Collaboration helped these investors stay informed and make more informed decisions, highlighting the benefit of collective wisdom in financial success. The tale of how Japanese housewives outsmarted global finance highlights their resilience and adaptability. Known as Mrs. Watanabe, these women defied norms and successfully navigated complex financial markets. Their journey emphasizes the importance of financial education, discipline, adaptability, and community support in achieving financial goals. This story demonstrates that, with the right knowledge and determination, anyone can become a savvy investor, challenging the notion that finance is solely for experts.